Welcome, everybody. Welcome to the Day Trading Options Daily Review for May 26, 2016. I'm Scott, he's Alan, and we're going to take a look at some trades that did not work out very well and kind of hopefully give you some clues as to why that is, what you need to do to make them work better in the future, and when to get in, when to get out. So a little bit different than what we're normally doing here, but obviously not every trade makes money, and the key is to look at your trade and understand what it is that was a problem, if there was anything. Bottom right-hand corner is our little subscribe button, so you don't miss any one of these exciting episodes. Make sure you do that. And in the descriptions are links to our day trading courses that you can take. And when you take them, you get a 30-day free trial to this software, so you can kick the tires yourself, see if this thing works for you. So, Alan, it's in the morning. We're looking at Amazon. What's happening?
Yeah, and well, this would be an example of one of the trades that doesn't work out, and we know that not every trade is a winner. That's part of what we're doing here. So the question is when it's not a good trade, even though it's a great setup, and that happens, that is reality. The market line is this one right here. It is moving up. It's leading the stock. You're out of the risk zone. You've got color. The market looks like it's going to go its way. Everything looks right. And then the trade doesn't move its way. Now, yes, the volume's a little bit low, and that's okay, but that's part of what happens when volume is a bit low, is that you can get a sharp reversal. Now, the market could reverse, or the stock could reverse. And so what we're going to do is we're just going to go forward 1 minute. I'm going to hit the buy button because he actually did buy these. So we're hitting that. And again, replay is close to reality in the sense of pricing, but it's not the same because the option prices are different from Monday to Friday just because it's closer to expiry. But this is close enough. So we're going to go 1 minute. And you can see that the thing's going sideways, and it's a small loss. It doesn't look like a bad trade right now. It looks like just something that's not working out. Anyways, this is normal flutter levels, and you wouldn't worry about it. At least I wouldn't, because it looks like the trade is still good. The market is pretty good. You can tell that this is declining, but again, that's not a problem. Now we're getting a bit of red in here, and this market line is definitely headed the other way. And you've got the little warning thing that says a minute log is reversing to the down direction, which is again just saying that you've gone red here. And what happens is there's lots of things to look at, but this is where we have to get good at narrowing our focus at what. And this is why I really like to replay. I mean, the replay was built because it's hard to go back in the day and live and say, well, what should I have looked at? So we had clues, plus the volume was really low on this stock, that things are not going the way we want. And I understand not wanting to take a small loss, because you go, well, it could come back, and there is flutter. So let's just see what happens with another minute. So we're going to move forward just 1 more minute. Now the market, you can see, is definitely red. And this is pulled way down. And yeah, it could turn around, but there's more things that look bad than look good. And I believe he got out at this point, which would have been the right thing to do, because it's the 10% loss. And you say, you know what? I'm done with that. And what we are going to do is we're going to look
7:36 is when he got out. Yeah.
So on this one, I think it says 9:48. And so, yeah, he took it says here 9.3% loss. So here we're reporting that as a 9.9. So it's, like I say, it's not super accurate, but it's pretty close. Gives you the general principle, which is what you need to get going. So what if you hang on? I'm hoping it's coming back. Well, that's a hard way to live, because the market he did the right thing, because overall the market's running down. So I definitely agree with the getting out and looking for another setup later in the day, if that wants to go that way, is the right thing to do. Because I've been in trades like that and we don't get every trade. So kudos. That's how it is. You did it right. And the only thing you might have done a little bit better is seeing that this thing's turned red a little bit sooner and just saying, well, I don't like it. I'll take a small loss. And yeah, I hate them when it looks like it's just reversing a little bit and then it goes the wrong way. So this trade, although people say, yeah, but you lost 10%, he did the right thing, because we don't win 10 out of 10. We win 8 out of 10 or 7 out of 10, and you're still making good money that way. So let's go look at the next one. And that one was Netflix. And this one was at market time, 10:22. I'm just going to move forward to 10:22. And by the way, it takes courage to actually post your trades, but you get better by doing that kind of stuff. So he did a buy here on this different stock. I'm going to just click the button. So that minus 1% is part of, you know, the fact that you've got commission and a bit of a spread. So instantly when you buy something, if you try to just instantly sell it again, you take a small loss. So here we are, where the market's looking pretty good. The only thing that concerns me right off is this. It says that the market's not so strong, and the volume was good, and you can see it's sort of trailing off. It's not bad, it's just weak. That's okay. This could still be a good trade. Now, got in before it broke the risk zone. I don't have a problem with that because it's showing good progress. You've got the purple line there, which means that the K-band is very strong, good move. Mag line's with you. The market is coming up. So this is actually a pretty good setup. So we're going to go forward, except for that one thing that the market's a bit choppy and weak. So we're going to go forward 1 minute. And he reported separately that he actually was in a bit of profit, not much, but a little bit. Now, if you're a candlestick expert, and I think candlestick stuff is mostly useless, but there's a few good things. When you've got these long tails, and some people call them shadows, that's something to pay attention to a little bit, because it says, well, you know, the price was all the way up here and then came all the way down, and so the body is still this, but you've got this shadow thing sitting there. And that's okay. This is not a thing to be concerned about. That's normal. You broke the risk zone. You still got everything going with you. Everything's looking good. So now we just go forward another minute, and it's showing you that, well, you know, not such a great trade anymore. I'm back to where I got started. Another minute, it's fluttering. And you get this little marker here that says, when you hover over it, it says the minute log is weak, but it's still heading up. Well, you can see it's at 0. And I don't have a volume spike that says this is the beginning of a move, or that's, you know, that people are buying it. And the market, you can see the line is heading down. And so we're going to go forward another minute, and it's like, you know, because it wasn't a big negative. But at this point, you're up 7%, and it was struggling, and struggling happens. So we're going to go forward another minute, and you can see now that there's a little bit of pullback. That's normal kind of flutter. This is normal stuff where you get a bit of a red. That kind of a deep red, that's a concern. And so at this point now, we've got a Y point that says, if you don't beat this strongly, this price here, it's not a good trade. You still have a bit of support from the market. Let's see what happens. This is not a bad trade. You're basically at cost. It's not hurting. Yes, the market's going down, that black line. And now, because it's 10:30, this switches to 5-minute candles, and that's okay. I'm going to just put it back to the 3-minute candles so that everything looks the same, because this is on auto, or 4 minutes. Okay, I'm going to go forward now. And because I actually like it that way too, that it switches up when you've got more data. It makes it better for you. So here we are. We're at, we've got a Y point. We're moving forward. It's recovering. The market's with you, and you can see why he's hanging in, and you're at 8%, and then it's pulling back again. This is the point I want to start looking at is we're now, we got in at 10:22. It's now been 10 minutes. I'm at 5% profit. This is where I like to get out after 10 minutes if it's not showing me a strong return. Showing me a mild return is okay, but this is not a stock that's taking off. And the whole, hey Scott, what's that motto? 10% in what?
10 minutes.
10 minutes. So here we got 5%, which is a great paycheck, really. And okay, we're going to see, well, maybe this thing's coming our way.
So I want to just jump in here for a second, Alan, because I think you made a really good point, right? Because oftentimes we talk about, well, 10% in 10 minutes in terms of making a lot of money fast. But at 10 minutes, what can you really say about this trade? Nothing.
It's mediocre.
Yeah, like it is not blasting off in the direction that we wanted it to. So maybe this is time to say, okay, you know, I've got a little bit of a profit. I'm going to leave with a little bit of profit because, hey, I could get back in 3 minutes if the thing started to take off as well, right?
Exactly. And there's, so we're missing something over here. I didn't get an art school degree. I was sciences. There's something here that's not there. And that's the tint. Also, we've got this as a caution. And one of the things that people don't get told a lot is that it is our mindset, because I've got a bunch of people I point to and say, this guy's doing well, and that guy's doing well, and this gal's doing well with the trading. And they have all the same tools, all the same strategies, and some of them have their own special ones, but they all have essentially the same indicators, and they use them. Pretty much there's only a few that people use out of all of them. Like almost everybody uses the EA and the K-band tint and the risk zone, like everybody. And they use the Y points or they don't, but most everybody uses this. And a lot of people are using the market line and the EA, which is up here too. And let me just make sure that's showing there. Okay, so right now it's still decent EA, but the common thing isn't the problem. It's the uncommon, and this is where the work is. And we do talk about it in the mindset course, and there's Mark Douglas's book, which is really good, and we've done, you know, some more things about mindset. But the thing is that this trade has shown us here that it's not fabulous. And the fact that it took from here to here, and I've lost the tint, and the volume's low, and yes, it's after 10:30, so at 10:30 the turn came, because we know that on half hours or even 15-minute intervals, there's these turns. So there's a turn there, and you know, and it's not always, but it's quite often that you get these turns on the 15 and the 30, but mostly, definitely, quite often on the 30. So we've seen a turn, and it's not showing us strength, it's showing us mediocrity. And the mindset part, this is the uncommon, because there's people successful and people not. The uncommon part, and this is the winning part of the game, is if you can do the charts, then the mindset is, you know what, I didn't get the love, I got a little bit of love, it's safe to walk away. This isn't a trade I'd get into, and this is like the looking at it with fresh eyes. Is this something that I'd get into? No. So then if it's not something I'd get into, then it's part of the stuff I wouldn't, which is 50-50 or less. At this stage, right here, I don't know where this baby's going. And if you don't know, then there's only really one answer: out. And the mindset part says, yeah, but it could, and I'm hoping, and I want it to, and. But that is actually the problem, is the listening to the I want, and the market doesn't hear us because we're not throwing money at it big enough. There's no volume from us that says, hey, I just bought 1 million shares, you know, to force the thing up. We're riding along on options. And that's the most important skill that takes the most work for some people, is the mindset, because the indicator part, we've got some awesome indicators, and this is the reports back I get from people that have used other systems. So it's not like my opinion, it's my opinion plus a whole bunch of other people that the indicators are great. But the last piece is the most difficult piece, which is the mindset that says, well, I want this trade to go up. Well, the short thing I'm just going to point out also is you'll notice here that the mag line got dashed. The purple line stopped being purple here and started changing up color to the lesser slope, which is telling us it's decelerating. This here tells us very instantly that the trade is lost its acceleration from here, and it started doing this kind of stuff. So there's a few things that are telling us that maybe this thing is time to leave. One of the other points is that we've had, it's dancing here against this RD line and the call zone, which are resistance points. The other resistance point is this 945 top, which was formed back here. It hasn't broken it. So it's struggling just to get back up here. And can I share a story that's maybe 1 minute long, Scott?
You certainly may, Alan.
I have a friend, he's made millions of dollars, yes, millions in trading. And someone I haven't told you much about, but he does swing trading. And the thing that he really likes doing is he's made money in real estate. He's made money in longer investments. He's not a day trader. I can't get him to be a day trader because he's got mindset issues that will block him from being a day trader. And this is where the story goes, is he recently lost $120,000 on a trade. And you go, isn't that a lot of money? Yes, it is. But he's pretty good at making money, and so that 120 didn't bother him. That's a great mindset because he knows what he needs to do. And the thing that he did is he called up my good friend who's an excellent day trader and longer term trader. And I'm going to drop the trade just as an example. He was in this trade where he was, he'd make money if the stock did anything in this range, and he was in it for a few weeks. And if it goes to this area or that area, he starts to lose money, and he starts to lose money big because he's actually sold options and he didn't have a protective stop. So basically that's called naked selling. So here it is, he sold naked these things on a swing trade, which is, and there's a lot of reasons I say don't do swing trading, but he was also trying to make money in cyclical trading, because so long as it traded here and wasn't trending, then he was okay. Unfortunately, and this is why he called my friend, which is also his friend, the stock started trending up. And he was betting that it was going to stay in this range. And so as soon as it starts climbing up, he calls my friend and he says, well, what do you think it's going to do? And he was not exactly in a panic, but he was certainly like, I need your information. And my friend looks at the chart and he says, well, listen, and here's the lesson that's pertinent and useful. It was in this range where it hit a bottom, and then it did this, and then it hit another bottom. And so the point about chart reading is that it didn't want to go any lower. There was enough support, people buying the stock and doing all that, that whenever it gets down to the bottom, people bought it and pushed it up. And so the risk was, and this is relates to this, is that if it ever breaks this point, it's time to leave. And so he didn't get out here. He got out when it was up here, and that's why it cost him money. If he got out here, he'd be okay. So here's the question about emotional application to a technical trade. It was very clear it's time to leave. His hope, I'm right. I bought money. I'm a cyclical trader guy. I like cycle trading. And is not working. But rather than listen to what the chart's telling him, he stayed in. And so going back to what we're looking at, and this is about learning, okay? So you don't have to lose the $120,000. You can say, listen, I tried to get up here, Mr. Stock, didn't like it, came down here. I got up here again, didn't like it, I came down. So I've lost color, I've hit a top. So what's the $120,000 question is, should I leave or should I stay?
There's a song about that, isn't it?
Exactly. And the answer is
Leave.
get out. And because it's not showing you the love, you're still up a few pennies. Yeah, you'll be disappointed. But number one, this is not a trade I'd get into here because I don't know where it's going. I'm only hoping it's going to go up, but I don't know because there's no indication. This is okay. That's not okay up there. This is not okay. I've got resistance up here. The volume isn't there. So let's go forward a little bit longer.
This is a great example of Warren Buffett's old saying about getting out too soon. When he was asked, how'd you make all your money? I got in too late and I got out too soon. In other words, he was very, very clear that there was a strong trend going on.
Yeah, and he needs the stock to go up. He doesn't make money on cycles. He's looking for it to increase in value. So here's 1 minute, still no love. 2 minutes, no love. 3. Now it's getting in a little bit of ouch territory. You can see that the market's falling down. We're a long ways away from the acceleration that we had up here. Even here is a good time to leave. Even though you're losing a little bit, it's better than what happens next. That's ouch. Well, I can't leave now because it hurts too much. And I've done that, and I know other people have done that. I haven't done that for a long time, and I really hope I never will again, because that's a mindset thing that really the answer to the problem was here, because you got an Einstein fractal sitting there, which is really just another Y point on a different time frame. I've got this, I've got that, and I've seen that before. This is a double top. It was up, and now it's heading down. And you can call your good trader friend and say, well, what should I do? Time to leave. And so I think the actual time and I think this guy's going to turn out to be a great trader. Don't get me wrong, I really do. But this is the stuff we have to learn. And so he got out actually there and took a loss that was a bit more than that. Because what happens is when the stock is running this way, and it's pretty clear and everybody sees it, the people that make the ask and the bid, the people that are saying, well, I'm going to pay you, this much money, and the people that say, well, I want that much money, they both start bringing down their offers pretty good, because they say, well, I'm not seeing the love here, so I'm not going to buy a call. And so even though the theoretical you should have only lost 6% actually becomes a bit more, that's the cost of hanging on, because the bidders aren't there. They're like, well, I'm going to give you the price like it was down here. When it's running up, the ask is sometimes higher than what it should be for theoretical, and the bidders start crawling up there too, because they go, well, I want in on the game. Well, the game's over here. And you could have still sold it here for equal or small loss. And that's one of my favorite rules, and I've used it all the time. And I, unless I have Alzheimer's, I will always remember this rule: is if it's not showing me the love, and it's already ran away and showed me that it's a bad trade right there, no tint, bad candle, all that stuff, then I'll be happy to get out at break even, and I'm happy to pay the commission, both ways, which is tiny money. It's ridiculously cheap. But I'm happy to get out at a tiny loss rather than that, because I've done it so many times. So this is experience. And so today you got the benefit of what a millionaire who's not a great technical trader, what did he do wrong? He's very successful at doing things that are fundamental, that one fellow, but to his credit, he calls up a great trader and says, what should I do? And he looked at that and he says, you should have got out last week. And he even gave him a great prediction that he was right about. And again, it's looking at charts. And I'm going to use, like, for example, well, I'll just draw it up here. He looked at the longer term chart because that's what this guy was dealing with. In here was this cycle range that the guy got into. And he says, you know what? You had a recent top that was up here. It's very likely it's going to go up to that recent top. And then within a few days, it ran up here, like to just almost hit that. Now this stock was $120 up here. Down here it was in the $70 to $50 range. And this guy was trying to make money in here, and it ran up to 117. Now, he got out, I think it was around 70 something dollars. So that's why it cost him, is because he's in heavy, just lots of contracts, that's all. But the point is, using charts, he could tell him, and he saved his hide from losing probably $500,000 because the guy was in naked, meaning that it keeps going. It's still costing you money. There's no protective stop because you sold the option. So he helped make somebody else rich by waiting, and he helped his friend to get out by telling him, no, you're out of Texas, you're in another state now. And that's it for today for me.
Wonderful. Thank you, Alan, for sharing all that. It's really good information. And thank you for joining us, everybody. This has been the Day Trading Options Daily Review for May 26, 2016. Please subscribe. Please like and share the video if you got something out of this. And take the courses, practice, and we'll see you on the beaches of the world. Thank you. Bye-bye.